Hello Barbados, and welcome to Season 2 of Money Matters. My name is Zandre Boyne, and I will be your host for this season. If you remember from our very first season, Money Matters is a show that seeks to highlight the products and services of a number of financial institutions around the island. And this season, we are going to be featuring the Barbados Stock Exchange and the Barbados Central Securities Depository, Inc. And for our very first episode, we have with us today Mr. Marlon Yarde, who is the Managing Director of the Barbados Stock Exchange. Welcome, Marlon.
Thank you.
Tell us a little bit about yourself.
Well, I've been here at the Barbados Stock Exchange for the last 13, going on 14 years. I should also say I'm an alumni of the Law School.
Okay.
So I always like to put that out there. I'm an accountant by profession.
Right.
I'm a fellow of the Chartered Professional Accountants of Canada. I'm also a Chartered Secretary in the Institute of Chartered Secretaries and Administrators.
Okay.
And to add a little flavor, I've always been a keen student of law. So I've acquired a bachelor's degree in law from Huddersfield University over the UK.
Okay.
And a master's of law specializing in securities law from Osgoode Hall Law School, York University in Canada.
So what exactly is that job that you do at the Barbados Stock Exchange?
Well, I am the managing director.
Right.
And the main purpose of the main function of the managing director is to ensure that I follow through on the strategic direction that the board would give to the organization. The board is responsible for guiding the operations, or as the word says, directing the organization. They make decisions as to how the company should go forward. Right. And with the assistance of my management team and the staff of the Barbados Stock Exchange and its subsidiary, the Barbados Central Securities Depository, we fulfill that goal. Right. And our primary goal in the marketplace as the stock exchange is to provide a marketplace for the listing and trading of securities. Yes. And those securities may be, for example, are usually equities for the most part, and we also trade bonds or particularly government paper on the stock exchange. Okay. So we provide a marketplace so that people can invest and create wealth for themselves.
Okay, so we're going to take a quick commercial break, and then we're going to be back with more Money Matters.
Exponential growth yields exponentially.
Welcome back to Money Matters. We're here at the Barbados Stock Exchange, and I'm talking to the Managing Director of the Stock Exchange, Mr. Marlon Yarde. All right, so now that Barbados knows you a little bit better, we know what you do at the Barbados Stock Exchange. Could you tell us a little bit about the history of the exchange?
Okay, the Barbados Stock Exchange was actually established in 1986, but actual trading on the exchange started in 1987. So we've been around for about 30 plus years. We've had a number of chairmen and directors and general managers over the years. For example, our first general manager was Mr. Anthony Johnson, right, followed by Mrs. Virginia Mapp, and now myself. So then we were called the Securities Exchange of Barbados. In 2001, we reincorporated to become the Barbados Stock Exchange. And while in the first part of our history, between 86 and 2001, we were responsible for both the trading, listing and trading of securities, and also the regulation of equity trading in the Barbados market. So in 2001, we reincorporated, and at that point in time too, there was the establishment of the then Securities Commission, and this came about with the enactment of the Securities Act here in Barbados. So at that point in time, we no longer had responsibility for regulating the market. That went over to the Securities Commission of Barbados, but we were licensed as a self-regulatory organization in Barbados. And what do I mean by a self-regulatory organization? We basically regulated the members and also the companies listed on the board of the stock exchange. So we had delegated authority through the Act from the Securities Commission to regulate members. They, though, had the overarching responsibility of regulating us, and if we didn't perform our functions as we should, they could withdraw that delegated authority from us. So that was in 2001. As time elapsed, one of the things that the board of the stock exchange decided to do was to move from being a member-owned organization, because during that period of time we were owned by the members, and we had at the time of our demutualization we had about 16 members who own the stock exchange. Well, 12 ordinary members who made a financial contribution towards being a member, and then 4 designated members. And the 4 designated members were the Central Bank of Barbados, the Barbados Chamber of Commerce and Industry, the Bar Association, and also the Institute of Banking and Finance. We made a decision to demutualize and move from being a not-for-profit member-owned organization to for-profit shareholder-owned corporation.
When did that demutualization take place?
That demutualization took place and was approved in 2015. And it had to be done through a mechanism in the Companies Act called a scheme of arrangement, because we were making a fundamental change to the organizational structure and capital of the company, and it had to be approved by the court. So obviously, like any other fundamental company change, we had to prepare members' information circulars advising our members what we were doing. We had to do a valuation of the company to allocate value to the persons who will become now shareholders of the company. And we had to go through the whole corporate restructuring, and that had to be, and we took the decision since we were set up by a statute, that we had to go to the courts to get that done. So we went to the Supreme Court, and it was approved by the courts. Obviously, part of the decision to approve it would mean that the court would have to see that we had all the structures in place and that the current members had approved the demutualization. They want to make sure that those who would have an interest in our demutualizations was not prejudiced in any way. And obviously part of the process too was included letting our regulators know what we were doing. Because as a member-owned self-regulatory organization, not for profit, although not meaning that we didn't work towards getting profits, our focus would be more on providing a service to the marketplace. As a for-profit shareholder-owned company, our focus will obviously become of making a profit. So one of the things the regulators would want to ensure that there were no conflicts of interest as it relates to us achieving our objective, part of our objectives in the public interest to be a self-regulatory organization, as opposed to mainly focusing on making profits at the expense of our other statutory responsibilities. So that was approved by the courts in December 2015, and we actually moved to issue the shares to the shareholders in a post-demutualization organizational meeting of the shareholders on March the 31st, 2016. So from that point in time, the members became shareholders. They were allocated shares. We issued 5 million shares at $1 each, so we have a share capital of $5 million. And the allocation was based on a number of factors, but again, we had to go through a whole valuation process and determining how we're going to allocate shares to the shareholders. Everybody basically got shares equally. These are the ordinary members, but the designated members who did not make an actual financial contribution to be a member, they were persons who were, for the good of the society as well, was said, well, you should be a member of the stock exchange. When we first established, they obviously got a lower quantum of shares. So that is our modus operandi now. And that's how we operate. We are a for-profit company, but we are still very keen on making sure we fulfill our responsibilities of making sure that we maintain the integrity of the capital markets in Barbados, that people feel comfortable and confident in that there is transparency and that all shareholders, all issuers are not disadvantaged in any way, or nobody can take advantage of other persons who are operating in the market.
Yeah. All right, so you spoke about the service that the stock exchange provides to the market. All right. I think for the most part, Barbadians are aware of the fact that there is a local stock exchange here, and that's where the trading of the our local publicly traded entities. That's where their shares are traded, right? But could you tell us exactly what it is that the stock exchange does to facilitate that trade?
Okay, as I mentioned earlier, we are licensed as a self-regulatory organization to provide a trading platform for companies to trade their shares. Now, companies have to be listed on the stock exchange first before they can trade on the stock exchange. And obviously, there's a process involved in becoming listed on the stock exchange. Qualifying requirements under the stock exchange rules and qualifying requirements under the Securities Act that is regulated by the Financial Services Commission. We cannot, according to Section 59 of the Securities Act, we cannot list a company for trading unless the shares are registered. So what I'm trying to emphasize here, that there's a process to make sure that companies are listed on the stock exchange and the persons involved in companies listed on the stock exchange are fit and proper. So companies are listed on the stock exchange, and the whole purpose that they're there is to allow the shareholders of the company. For example, the process might be a company does an IPO or initial public offering where they go to the market, they issue a prospectus and say, I want to raise $50 million for such and such a purpose, expand, develop new markets, whatever the reason are, expand their business. So at the end of the day, the idea is to make a profit. You go to the market, you raise the money, you issue shares to the persons who subscribe or purchase those shares for the money that they put in, and then you provide a marketplace for those persons to share. Because when you buy shares, you're not buying shares because for just the sake of buying shares, or you love the company or you love the people. You're buying shares to make money. So the whole idea is that we provide that platform where companies can list those shares and give the shareholders of that company an opportunity to trade their shares. You buy your shares, say, at $1, you decide, well, I want to, whatever I want to do. You have your particular objective in mind. I want to build my house, educate my children, retirement, whatever. And I have my objective, where I want to invest. Yeah. I have a time horizon. I think I will need my money, say, in 5 years, 10 years, 20 years. So you have your time horizon, and you say, well, look, at some point in time, I want to sell these shares. Somebody else out there is going to want to buy your shares. So we provide that marketplace for persons to sell and buy shares of a particular company that they might have invested in. So we provide that marketplace in a well-regulated environment. Trading is done is regulated based on our rules and based on the legislation that governs us. For example, the Financial Services Commission Act, the Securities Act, to some degree, the Companies Act. For example, if mutual funds are listed, the Mutual Funds Act. So there's a whole regime of legislation that governs that. So we provide that marketplace to facilitate the listing and trading by investors of securities on the board of the stock exchange. And that's fundamentally what we do.
We're going to take a quick commercial break, and then we're going to be back with more Money Matters.
Positive direction yields positive growth.
Welcome back to Money Matters. We are here at the Barbados Stock Exchange with the Managing Director of the Barbados Stock Exchange, Marlon Yarde. We touched on a number of things before. We touched on the history of the Barbados Stock Exchange, and we spoke about the demutualization of the stock exchange and exactly what it is that the stock exchange does to facilitate the trade of shares on the exchange. Now, when you want to purchase shares, you must visit one of the registered brokers around the island. Okay, could you tell us a little bit about those?
We have 9 registered brokers who trade on behalf of investors in the Barbados market. It's not a situation where you can come to the stock exchange and say, well, I want to buy a number of shares in company X or company B or whatever. You have to go through a registered broker. Now, again, these brokers are regulated by us here at the stock exchange in our role as a self-regulatory organization, and they also are licensed to do their brokerage business by the Financial Services Commission. So having a broker is a relationship that you develop over a while. It's like a doctor. In the case of us men, a barber, you have a relationship with your barber. Yes. And you make sure that you're comfortable with who you're going with. So we have a number of brokers in the market, and the list of brokers are on our website, www.bsc.com.bb. And you tell the broker what you are trying to achieve, the time horizon you have to achieve it, and one of the things you want to do in any investment environment is that you want to tell your broker, well, I'm a person who don't like too much risk in things, so I don't want to invest in certain type of companies which you might think might be more aggressive in how they do their business, and I say they might think more risky, So it's and maybe that's the wrong word, but you need to let your broker know exactly what your risk profile is, what you are trying to achieve, your objective, and your time horizon. And the broker advises you as it relates to what might be best for you. Sometimes it's always good though to go, if you're going to your doctor, with some sort of idea of what you're looking for, what you're trying to achieve. You can do your own homework on the companies listed on the exchange, and you have a good idea of what you're trying to achieve, so that when you sit down with your broker, or if you're going to a broker for the first time, when you are assessing the broker, you get a feel for how they're advising you, and if you are comfortable with the particular relationship. So the broker does the trading. They are linked in to the Barbados Stock Exchange. Our trading is done electronically. Not that brokers come to the stock exchange. That was years ago when we had open outcry, but our brokers stay at their desks, at their office, and they trade on your behalf. So that is basically the relationship. The brokers obviously have to be trained in the use of our system, and once we confirm with the regulator that the particular trader is proficient in the use of our trading system, we advise the commission, and that particular trader, who is part of a brokerage house, is allowed or is licensed to trade in the marketplace. So there are rules governing how they trade. They have to make sure they get the best price, best execution. That is fundamental. They have to prioritize their trading activity above the trading activity of, say, the brokerage house, who might be trading on their own behalf. So the outside clients have priority, and so that is fundamentally it. So is that the key thing though? Like any relationship, there must be communication and making sure you understand what you really want, and if the particular broker can give you the service that you require. And a lot of our commercial banks have their own brokerage arms. So you might have an ongoing relationship with a particular financial institution, and you want to start trading. You say, well, look, could you put me on to your the brokerage arm of your bank, so that I can get started in investing.
Right. Now, I know that people sometimes use the terms trader and broker interchangeably, right? I know there's a difference between the two. Could you break it down for us?
Well, the trader is the person who actually does the trading on our electronic trading system. Usually, the broker the brokerage is the house that the trader works for. Because usually with brokerage, there are other types of transactions that the brokerage can do on behalf of, say, companies. Where, for example, if you want to do an IPO, the brokerage house would be responsible for facilitating those types of transactions. But the traders work within the brokerage house that is there. And again, we have 9 brokerage houses. One though trades only for its own account. It doesn't trade on behalf of the public. One of our brokers does that. They only trade for themselves, and it's a mutual fund company, so they only trade for their own mutual fund. And again, that ensures that there's no conflicts of interest as they go there in the marketplace, right, trading for their mutual funds, as opposed to. Yeah.
Okay, so you actually mentioned a number of financial instruments that are traded on the Barbados Stock Exchange. Stocks, of course, is the major one. What are some of the other instruments that are traded on the exchange other than shares?
Mainly treasury bills. Those are the other types of instruments. Government paper is the other type. We don't trade all government paper. It's mainly treasury bills. There are some corporate bonds that are traded, but the main focus is equity. Also, too, there's mutual funds. There's a one closed-end mutual fund that's currently listed on well, it's split in 2 now. Yes. So mutual funds are also traded on our board, and that's it. That's mainly it.
Right. Whenever you go on the stock exchange, you will always see that the shares are separated. There's the regular market as well as the junior market. All right. Could you explain that segregation?
Well, we actually have 3 boards now recently, because with the demutualization of the stock exchange, we added another board. This is the international securities market. But the main boards are the regular board, which is like the main market of the stock exchange. These are for the established companies. You will find that the companies that are there have been listed on the stock exchange for some time. And there are certain requirements for listing on the main board. For example, there are 2 types of qualifications. I like to say quantitative, where, for example, you must be a profitable company, you must have assets of at least $1 million, et cetera, et cetera. And then there's the quantitative, companies that are registered in good standing with the Corporate Affairs Office. You have a strong management team, a strong board of directors who are people with a track record of running and managing companies. So I call those qualitative factors. Right. So there's those requirements for the main market and the junior market, and then also the reporting requirements. One of the key things for being listed on a stock exchange is that you need to provide financial information on a quarterly basis, and if there are any material changes or material facts that would affect the people's decision as to whether or not they're going to buy or sell a share or a security, or the price, if that material change or fact will change the price of the security, if people knew about it, these are the types of things. And these material changes and facts, when they happen, you have to report it to the stock exchange right away so that we can make this information available. Sometimes we would require you to publish this information in the press. But when you go to our website, you will see that there's a new section of our website where when certain things happen in a company, we will put that information out there. Yes. So the regular market is the main board, and then there's the junior market for small to medium-sized enterprises. And the whole idea for the junior market is to allow companies that are now starting out to be able to have an opportunity to raise capital and also to be listed on the junior market. And the quantitative and the quantitative requirements would not be as high as the regular market, but the qualitative factors remains the same. You need to make sure that you have fit and proper persons directing, managing, and that you have strong governance practices within the organization. The other difference too with the junior market is that you must have a sponsor who one of the brokerage houses to shepherd you through the process of being listed, and is there that relationship with you throughout the listing on the junior market. Now, as companies grow, there's an opportunity for them to graduate to the main board, and we've seen that a few times in history of the stock exchange. And then the most recent addition to the stock exchange is the establishment of our international securities market, and that's a separate market to take advantage of the companies that are here in the international business and financial services sector, and we can talk on that further. So, but that is another aspect of our operations that we launched last year, and we are developing that particular market. Okay. So that market is again is going to benefit Barbados as a whole, as opposed to just the Barbados Stock Exchange. As I say, we could do a whole program in that particular.
Okay.
So.
All right, we're going to take a short break here, and then we're going to be back with more Money Matters.
Principles practice multiplies worth.
Welcome back to Money Matters. Once again, we are here at the Barbados Stock Exchange talking to Mr. Marlon Yarde, the Managing Director of the exchange. All right, before we were talking, we were talking about the companies listed on the exchange. Now, I know there are a number of options that companies have in order to raise funds. They can do debt, they can raise a bond, or they can list publicly. What are some of the benefits to being listed, becoming a public company, becoming listed on the exchange rather than seeking financing through some other means?
Yeah. Well, the main reason I think for companies to list on the exchange is to raise capital and provide a marketplace for their shareholders to trade these shares. Now, the issue of raising capital, as you said, there are a number of ways you can raise capital. But sometimes you might want to make your company available, the ownership of your company available to the public. Now, making your company available to the public doesn't mean that you give away your company. Right. You know, once you control or own 51% of your company, you control your company. You're the majority shareholder. So some of the benefits for listing on the stock exchange, in addition to raising capital, might be you want to raise the profile of your company in the marketplace. You will find that the more shareholders you have in the marketplace, the more supportive those shareholders are of your product product or service that you're selling. So that's one. Raise the profile. It is also an avenue for you to, in the future, raise capital at a cheaper rate. And the reason for that, for example, if you want to raise, you feel you're satisfied, you're happy with the number of share capital you own, and you want to take on more debt, and depending on if your debt to equity ratio is good, you can say, well, let me go to financial institutions and raise further debt. And you find that you would be seen in a far better light because you are a public company and that you are listed on an exchange. And the reason for that is quite simple. Financiers know that you have to operate at a certain level, that you have to disclose information, that you have certain governance practices in place. For example, one of the things that the stock exchange has is corporate governance recommendations for listed companies. It's a comply and explain mode in that. If you don't comply, you explain what you're doing. But the whole idea behind these corporate governance recommendations is to make sure that your company is managed and directed in a transparent manner, that your decision process is clear for everyone to see, that you eliminate as much as you eliminate as much as possible all conflicts of interest. Now, if there's a conflict of interest, that those conflicts of interest are declared so that parties know that, you know, the particular corporate conflict is here, but this is how we've mitigated against it. So the financiers, the banks know that you are operating at a certain standard, that you are making disclosures to the marketplace, and that you have a responsibility to your shareholders to deliver a reasonable return on their investment. So that's important. So it allows you to raise capital at a lower cost. I mean, there are other reasons, but I think the fundamental thing is that, you know, it enhances your business by raising the profile. It enhances your business because your shareholders become ambassadors for your company, because they know that once you do well, they will do well. And we haven't gotten into yet how shareholders make money by investing, but they know that once you do well, they will do well in the returns that they get for the company. And then the ability at some point in the future to raise capital at a reasonable cost, or a more lower cost than you would otherwise have, because the financiers will see that there is a lesser risk, and they wouldn't have to charge a higher risk premium, so to speak, on the rate they charge, that they charge on the interest rate that they're going to apply to your financing.
Okay. All right. So I own a company. I'm aware of all of these advantages, and I finally made the decision, all right, it is time. I want to become publicly listed. I want to take my company public. We touched on it before, but what is that process like for the owner of a company?
Well, first I should say, you just don't get up one morning and decide you want to go public. Usually, from the time you have the idea in your mind, your directors, the board of directors decide, well, this is a direction we want to go. It's something that you've discussed with the management, the CEO or management of the team. You need to start making sure that you have the structures in place to allow you to be a public company. Now, one of the key things is that there has to be levels of accountability within the organization to ensure that when you become listed, you can facilitate the requirements of being listed. So you should decide, well, let me see what is required here. Do my management team have the expertise and competence to do these things? And if we don't, who do we bring in? Or who do we get advisors to allow us to do these things? So it is one of these strategic decisions that you make, and you work towards that decision. So you've gone through all that process, and you think your company is in a position to do this thing. You need to talk with the various professionals that will help you. You got to talk with the accountants. You got to talk with the attorneys. You got to find a brokerage house to help you through that process. You got to talk with the regulators, for example, the Financial Services Commission, and you have to talk with the exchange. And something too that's very important, you need to be able to tell a story that would convince people that this is the company I want to be involved in and invest in. So you need to have your marketing and PR people in place to help you develop your story. And all you're doing is taking the truth and putting it out there for people to see what you're about. Because at the end of the day, you don't want to do, say for example, a public offering, and people don't take it up. Yes. And you don't want to decide that you want to list, and you don't have the structures, the internal controls, etc. in place to support what you want to do, because it is an undertaking. Yes. So these things you have to sit down and think about and plan and get the professionals together. You need, for example, you would need the accountants and the attorneys to, for example, the accountants to develop projections and the business plans to support why you're going to get this money to eventually list those shares on the stock exchange. You need the lawyers to help you develop the prospectus to go to the public market. You need to fully understand you need, for example, the accountants to value your business and value how you want to, the price you want to issue these shares at. So there's a lot of moving parts that you need to get together. But it's not something that is insurmountable. It's not insurmountable. And then at the same time, you want to be, as I said, talk to the regulators and make sure that you know what is required as it relates to listing your securities on and having them registered with the commission. Now, the regulators are not going to opine on the worthiness of your particular business venture. That is for the public to determine. What the regulators want to make sure is that you have full information, truthful information, plain and simple for persons to understand what they're taking on, and if there are any risks, what those risks are, and if they're willing to take on those risks. So we're not going to say, well, that you can't list because we don't think that business could work. That is not our role. Our role is to make sure that there's full disclosure as it relates to
So an investor is well informed when he or she decides either to...
They can make an informed decision as how to treat or to deal with the particular security, if they want to accept it or reject it, and on an ongoing basis, how they want to, if they want to sell, buy, or hold those particular securities.
Now, this is a very interesting topic, especially now with all of the things that are going on in the financial sector. And certainly many Barbadians are looking for different or less traditional investment options. All right. For a person who is considering playing the stock market and getting involved in the purchase and selling of shares, what are some of the things that they should consider in terms of risk, etc.?
Well, the thing is, I don't like the word playing the stock exchange. I think that, getting involved in investing is serious business. And as I like to tell my staff here, it's not just shares or numbers. When you see these things, you are dealing with people's lives and what they are trying to achieve for themselves and their families. So when you get into investing, you need to be clear, and I keep going back to the same things all the time. You need to be clear on what you're trying to achieve. That is paramount. You can't, and we're all, some of us might operate like we're just going along. But you can't just go along. You need to be clear on what your particular objective is. So you have a clear vision in your mind. This is what I want to achieve. And all the time, for me personally, there's something I'm always thinking about. What am I trying to achieve? So you need to, and then you need to know how much time you have to do that and what risk you're willing to take on. Now, although our business here is that of trading securities, be it equities, bonds, etc., I always tell people you need to have a holistic view on what you're doing. So even though you might invest in an asset class, or you might diversify within an asset class, which is shares, you need to diversify across asset classes. So you got shares, you got bonds, you got everything. So you need to look at things in a holistic point of view. So for example, if you're looking to retire, a young man like you might say, well, I have another 30 years before I retire. A not so young man like me might say, I have 15 years to retire. Yeah. So my approach will be different to yours.
Yes.
You'll be a lot more aggressive. You might say, I want more equities in my portfolio, a higher weighting of equities as opposed to fixed income securities or bonds. I might say, I want a lower proportion of equities and a higher proportion of fixed income securities. And then when I'm in retirement, I might have a very slither of equities and a bigger portion of fixed income because I want to make sure that I have my interest payments coming in on a regular basis, these kind of things. So you have to consider these things and be clear. And I can't say you need to be clear on what you're trying to achieve and make sure that you choose and be advised and research the areas that would help you to achieve your particular objective. And some people say, well, I don't understand these things. Once you can read and write, trust me, you can understand these things.
Okay.
So, and once you have a desire to achieve a particular objective, you will do what is necessary to help you understand and achieve that particular objective.
There's a feeling by certain Barbadians that investing is only for the wealthy. What would you say to those persons?
I do not agree. I am not a wealthy man and I like to invest. Now let me tell you, the thing is, right, it's all part of an overall financial plan. And this overall financial plan includes knowing what you want to achieve, developing a plan. And part of developing a plan is having a budget, plain and simple. You cannot spend more money than you're earning.
And let's raise that.
Unless you raise that. So be it me as an individual, my family and I, company, community, country. Simple rule. You cannot spend more money than you're earning. And the only way you can spend more than you're earning on a personal level is you can pull out that credit card and borrow somebody money, and nobody lends you money for free.
Of course not.
They charge you an interest rate. So the best thing to do is make sure that you keep your spending within what you're earning. So again, you have a budget, you watch how you're spending your money. And the thing is, I always say, when you put pen to paper and write down how you're spending your money, right away it tells you a lot about yourself in that it shows you what is important to you. And sometimes it shows you where you can cut out certain things to achieve your particular objective. So if you're spending more than you're earning, the first goal you want to do is spend as much as you're earning. You want to balance the budget first.
Yeah.
And then once you've done that, and it's simple, you look at there's certain fixed expenditure, fixed costs that you have. Ain't much you could do with that. The only way you can deal with that is at the beginning. Negotiate hard. You want to get a car loan, you want to get a house loan, you negotiate hard and get the best possible rate you can within the framework within your financial resources, your income level. And then there's also variable expenses. Basically, monies that you spend based on your usage. The light in the house, the phone bill, the cell bill, the gas in the car. All these things that go up and down based on your personal usage.
Yeah, you can change your behavior.
You can change your behavior.
That's right.
And you hit the nail on the head. It's all about behavior. So you can change your behavior in that aspect. And then there's this discretionary spending, things that you spend money on, you really don't need to. Now, I don't want people to say that you got to live like a Scrooge. You got to enjoy your life.
That's right.
But still, set a limit on how the amount of money you spend in your discretionary spending. So you find once you look at this thing and see what type of person you are, what's important to you, and then you decide what is more important to you, you can control. We talk about things, but variable and discretionary. And so once you control that, so our first goal is don't spend no more than we think, so we balance in our budget.
Right.
Then the next goal is to spend less than so we start to develop a surplus.
That's right.
So out of that surplus, you got a little emergency fund and everything. Out of that surplus, you start investing. You set aside some of your money to invest. Other people have some other goals. People might want to, as you develop and as you grow your surplus and you grow your savings and resources, you want to give some to charity, some charitable exercise. These things are good because everybody got to help somebody. And then and out of that, so you got your base of savings, and out of that you invest. So that is how. And any and everybody can do that. Going back to your question, this is something that we all have control over, and we can do these things.
All right, so let's talk about the potential gains that you can see from your investment. All right, so for sure, you're looking at capital appreciation, and we're looking at dividends, etc. So let's talk about the potential gains that you can see when you actually start to invest in shares on the exchange.
So basically, the question you're asking me is, how do we make money from investing? That's basically, particularly in equities. There are two ways you make money when you invest in equities. One, via capital gains. And capital gains is quite simply, capital gains only occur when you actually sell the security you bought. You can have a book capital gains or gain or loss. So I tell people, don't worry, if things dip a little bit, don't worry. You only lose money when you actually sell the particular security. So it's capital gains. So over time, and history has shown that over time, equities appreciate in value. They might fluctuate along the way, but in the fluctuation, the trend is always in an upward direction. So when you have reached that particular time horizon to achieve your particular objective or goal, you say, well, I want to sell my shares. I go to my broker and say, look, I want to sell these shares. I want to sell them at, say, $5, but you give them a range between, say, $4.80 and $5. You're comfortable with that because a few years back you bought those shares at, say, $1.50 or $2, so you already have a gain. So if you bought these shares at $2 and you eventually sell them at $5, you have a capital gain of $3 times the number of shares that you sold. So $3 times, say, $100, 100 shares is 300 shares. So one, you make money via capital gains when you sell those shares. And as of now, there's no capital gains on capital gains tax on securities sold on the stock exchange. And two, and this is the ones like that people see all the time, is dividends. And dividends is basically the revenue that, or the income that the company pays on the shares. So based on the performance of the company in a particular year, they might declare a dividend, which is a portion of the profits of the company. And the dividend is, there's no guarantee you'll get a dividend. It's at the discretion of the board of directors of the company. They might decide, well, look, I'm going to pay a dividend after they consider the future requirements of the future capital requirements of the company. And they say, I will pay a portion of the income in dividends. And the dividends is quite simply, they might declare a dividend of 2 cents per share. So as a shareholder, you might have 100 shares, 2 cents. That's 20 cents, right? For 100 shares. So that is, so you make money by the dividends that is declared and by the capital gains. Now, dividends are subject to a withholding tax of 12.5%. And what I should also say is that, it is totally at the discretion of the company if they pay a dividend. So that's how you make money, and that's how you benefit from being a shareholder in a particular company. And then from a company's perspective, being able to raise capital and having persons up there as shareholders promoting their security in the marketplace.
Thank you, Marlon Yarde, for being here with us. And thank you for all of the information that you would have provided us with about the Barbados Stock Exchange and how it works and investing, etc. All right, we've made it to the end of our very first episode of Money Matters Season 2. Stay tuned for more episodes.